Hey, my two friends, welcome to Next Small Bet. In this episode, we're going to talk about Redfin. So, as America's fourth largest online real estate service provider, Redfin is performing really badly in terms of its stock. As the housing market in US is recovering, and in some areas, it's even reached a new high in terms of the real estate and the housing price. Why Redfin is performing so badly and is not recovering nowhere near its all-time high stock price or whatsoever. In this episode, we're going to check out that. So yeah, first, let's answer this question. How does Redfin earn money? Where the money source of Redfin? That's why I put the who's stealing Redfin's money in this episode's title. So there are actually 4 or 5 main sources for Redfin to earn its money. Redfin actually is the top ranking online real estate platform that provide a comprehensive services to its customers. So we all know Redfin is a real estate brokerage that has the portrait of high technology to optimize the home buying and selling experiences. And the first thing it earns money from is the listing fees. So Redfin charges a listing fee for every home sold through its platform. When a home is sold, Redfin earns revenue by facilitating the transaction. And the second source is by flipping houses. Redfin also generates income from that. This involves in buying houses, renovating them, and then sell them to buyers. And the third one is service fees. So through its service called Redfin Now, Redfin charges a service fee for purchasing homes directly from sellers. This service streamlines the selling process for homeowners who wants a quick sale. So this is pretty smart. And the fourth one is mortgage referral fees. So Redfin earns referral fees from mortgages. It operates a marketplace that allows borrowers to compare loans from nearly 50 lenders nationwide. And interestingly, this marketplace is powered by its competitor Zillow, which is the largest online website and platform for US real estate. Okay, so knowing that, the 4 sources of Redfin's income, the first one, listing fees, the second, flipping houses, the third one, service fees, and the fourth one, mortgage referral fees. And now we want to get a peek into what portions of each revenue sources. So for the fiscal year ending last year, December 31st of 2023, the real estate services revenue was between 127 million to 137 million. And rentals revenue was between 49 million and 50 million. Mortgage revenue was between 26 million and 29 million. Other revenues combined was between 9 million and 10 million. From the financial report from Q4 2023, we noticed that the fourth quarter revenue was $218.1 million. And that was a decrease of 2% compared to the first quarter of 2022. And if we zoom that to the full year 2023, the revenue from continuing operations was $976.6 million, also a decrease of over 11% year over year. So that marks some red flag to Redfin as a company and the Redfin stock. Why in 2023 Redfin's revenue is lower than 2022, considering what we just said, the US housing market is recovering? Is it because Redfin as a company has some problem inside, or is it still because of the interest rate is at a high level and its performance is dragged behind by the overall performance of the housing market? Let's dive into that. So the decrease in Redfin's revenue in 2023 compared to 2022 can be attributed to several factors. After we did some investigations and research, it comes to these a few points. So the first one is housing market condition. The revenue dip is partly due to the slowing housing market, which impacted the company's brokerage business, which is the largest business for its income sources. So we're observing housing market recovering in some areas, and we might be biased by the performance of the housing market in our area, but the U.S. housing market as a whole is still slow. Because the interest rate is high. Potential buyers are still very hesitant from the whole country's point of view. And the second one is brokerage revenue decline. Specifically, the brokerage business was down by 18% to 166 million in revenue. And the third one is about the company itself, is its market share. So Redfin's market share dropped slightly year over year as well. As we mentioned, Redfin is the fourth largest online real estate company nationwide, and the top three are first one Zillow, second one Realtor, the third one Trulia, and the fourth one is Redfin. So Redfin's market share compared with the other online real estate services were dropped by some percent last year, and that also dragged the performance of the company's revenue significantly last year. And the last one, the fourth one, is mortgage rates and prices. We mentioned that the high mortgage rates and high prices made the listings more expensive, affecting affordability and sales. We know Redfin has been focusing on efficiency and growth initiatives to improve its financial performance. If we take a look at Redfin's current stock, its market capital is just above $700 million, not high at all, but it has a negative PE ratio. It's still not profitable, and the stock price is dropping below $6 per share. So is there any outlook or expectations when Redfin is going to be profitable? So according to the latest financial results, Redfin's CEO mentioned that they were trying to achieve break-even by the first half of 2024. The goal is subject to certain uncertainties, of course, particularly due to mortgage interest rates are still high, and the Federal Reserve has no obvious signs of lower the interest rate considering the inflation and overall economy's status in the United States. In the fourth quarter of 2023, Redfin reported a net loss of over $22 million, which is an improvement compared to a net loss of $61.9 million the year before, the year 2022. And the company has also improved its gross margin and operating margins, even in a challenging housing market. These are pretty good signs. These are very promising signs. These improvements suggest that Redfin is on a path to profitability with new sales initiatives expected to contribute to revenue growth throughout 2024 and 2025. So the conclusion. So the first one is Redfin, even though in some areas in the United States, the housing market is recovering, the housing market overall is still the performance is dragging behind by the high federal interest rate. And because the current inflation level, as well as the strength of the country's economy, there's no sign Federal Reserve is going to drop the interest rate in anytime soon. Some early predictions said 5 times or 3 times interest rate drop this year, and the starting date was pushed back from March to May to June. Now, over half of analysts are thinking about maybe once or twice or 3 times in the second half of this year, but even that is still some unknown. So the high interest rate is definitely affecting buyers' capability to buy real estates, and that affects Redfin's core business. And because there's no clear date when the Federal Reserve is going to cut its interest rate, so there's no clear sign of a date for the next momentum for Redfin stock. But considering the increasing ability for Redfin to get higher margin and turn into the profitable territory, and also considering the wide ranges of services, Redfin has a very good potential considering its current low market values. So no clear momentum date for Redfin stock, but a lot of potential in the future. Overall, a pretty solid company and a pretty solid business. Because there's no momentum date based on the macro economy or so, I don't have a momentum trade plan for this stock, but in my long-term portfolio, I'll hold a place for Redfin. That's everything I want to talk about Redfin and Redfin stock in this episode. If you like the content, please like this video and subscribe to the channel. I'll see you in the next one.